Tahir Badshah is with us, CIO at Invesco Mutual Fund. Tahir, good to have you with us here. Thank you very much for your time. You know, the last time you were on, Tahir, you were, we were talking mid caps and small caps, and you were on the other side of the equation. You basically were saying that there are opportunities, still lots of opportunities, right? I mean, it's not all, as some have called it, not mid caps but mad caps. I mean, you disagreed. Your thoughts with what we've seen so far, Tahir, especially for that part of the market, because we are getting that part is getting hit, but not as much as what large caps are doing.
Yeah, I think since we last spoke, I think we've probably seen that trend more or less continue. I mean, we've not really seen, despite some of the new challenges which has come up more from the perspective of the global markets as well as geopolitics. I think there's been a fair amount of resilience as far as that space is concerned. And I think I continue to maintain that what we are seeing even at our end from our research desks, we continue to see incremental opportunities come through our way. And, of course, there is a lot of diversity. I can't really call out that there is something which is concentrated in a particular sector, which is actually in a way good, because that is exactly what I've been trying to kind of convey, that there is a fair bit of broadening which is taking place in the market. New opportunities are arising. Many of the companies in different sectors are exhibiting a reasonably positive stance. And there are drivers which are emerging as well. Not all of them are probably consistent with the top-down thought process, but they're still, up and about. So I think I continue to maintain that, we probably may be getting too ahead of us by just thinking very narrowly about the fact that it's up 35% in the last 6 odd months or so, and therefore it's all done with. I disagree with that. I think there can be a possible correction. But in that process, I think one might probably lose out on the larger picture or the long-term picture in this segment, or in general in the domestic market as such.
Tahir, morning. Rima here. You want to share some interesting ideas, any thoughts on the IT earnings so far? And does it change in any way your portfolio constitution of tech names?
So I think there has been a clear, the result season up until now, most of the companies that have reported up until now, there are large caps and a couple of the mid caps also which are reporting now. And there seems to be a certain amount of pushback for sure. I mean, there is business which is coming through, but it is not starting to ramp up, or it is not starting to execute. And this is pretty much the trend across all the kind of companies we've seen that, right? So I think it does push back the expected recovery in growth for FY25, maybe by a quarter or so. And to that extent, I think some of the rally which has happened in the recent times also puts them at a stage where valuations don't now necessarily, offer a lot of upside. We may probably see some bit of sideways movement, especially if a quarter or so of deferment continues. I think we are also reconciling ourselves with the fact that there are conditions in the US which can lead to some more, slowdown, even though gradual, coming through in calendar year 24. And we want to be alive to that fact as well. So I think, we've kind of pulled back a little bit as far as that sector is concerned.
Hi, Tahir. Good morning. Tahir, as we speak, the markets are under some pressure, but what's really kick-started for themselves is Bajaj Auto. The bike is zooming ahead as we speak. It's up close to around 5%. I remember the last few years, at times when there wasn't a lot of interest in the two-wheeler space, I think you were a little bit positive. How were you all positioned on the auto pack? And, within the auto pack, what do you like? Do you like the ancillaries, or do you like the two-wheelers, four-wheelers? What is it?
So at this stage, I don't think we are making a lot of differentiation between segments. So we are taking them as, opportunities within individual segments. There are companies which are gaining market share. There is product launch cycle rotating between different players at different points of time, whether be it in two-wheelers or whether be it in four-wheelers. And we're just trying to be on the right side of the growth momentum in across all these segments. So trying to put the best company out there forward in our allocations. We like a good set of companies, whether be it in four-wheelers or two-wheelers, or even some of the ancillaries, but largely guided by where do you see the chances of market share gains and higher growth compared to the overall market, and a possibility of earnings upgrades coming through.
What is the weightage of autos? autos weightage, Tahir, as of now, as a percentage of your portfolio?
Well, auto ancillaries, I would reckon, would fall somewhere between 6 to 10% of the total portfolios and some of the diversified strategies. I would like to think that this is a sector which is still reasonably in good shape. There is growth which is coming by, of course, led by the festive season in the near term. But then, like as I said, there are certain bottom-up opportunities where you also feel confident about their ability to either retrieve, regain, or maintain market share. And that is something that we try to keep more in focus.
No, got that. Tahir, any other smaller segments, smaller areas, without talking stocks, where you think there's mispricing, where there is opportunity?
Yeah, I think what we've seen come through from our desks in the recent past has been, like as I said, quite diverse. We've seen opportunities in some pharmaceutical names. We've seen opportunities in certain commodity ancillaries of late. We have seen opportunities come through in a few of the retail categories, export-oriented companies. May not, like as I said, perhaps be consistent with the top-down view that we may probably see a slowdown and continuation of a slowdown as far as the global markets are concerned, particularly the US. But despite that, there are certain specific export-related opportunities which are coming through in certain consumer kind of products. So I think it's a pretty diverse, eclectic mix of different opportunities.
What can you go one level lower away in terms of is it commodity ancillaries, something in exports, consumer side?
Yeah, so that is the problem. The problem is that they don't really form cohesive sectors as such. So
correct.
It's difficult to call them out from that standpoint. But I think it's across a fair bit of subsegments of retail, subsegments of companies which are suppliers to commodity companies. There are certain companies which are in the pharmaceutical space. Of late, even some of the real estate opportunities have come into focus. I think we are seeing we are keenly observing the space where we can see premiumization. That's a very strong trend and theme which is emerging in almost every possible part of the market, be it in real estate, consumption, autos. So I think that is something which is there to stay. And at the same time, we are keeping an eye on a possible recovery at the lower end of the market. So that's how we are basically dividing our attention.
In real estate, Tahir, do you want to, because India's real estate market is many micro markets, right? Do you want to provide some more color where you do see value right now and opportunity? Because I was just seeing your fact sheet. You don't own too much real estate in the funds that you manage so far.
No, so in terms of percentage, we don't really have very large exposures, but incrementally we are focused on some of the companies which provide or are likely to provide pan-India opportunity and probably carry a good brand pull in the market as well. And more importantly, they operate in the premium to the luxury segment of the market. I think those are the spaces that we are trying to look at. And that is where some of the incremental opportunities are coming through. It's coming more through in the last some weeks, so probably they still don't reflect enough fact sheets, but you should see them in due course of time.
Okay, so incrementally adding to the real estate portfolio, pan-India players focusing on premium real estate, luxury. Thank you very much, Tahir, for joining in. We've